Hi, my name is Robert Yoon. I attend Fairfax High School and I'm a rising senior.
Hi, my name is Chris Ree and I attend McLean High School and I'm a rising junior.
Hi, my name is Ken Yu. I'm the Chief Operating Officer at Falcon Capital Advisors. Looking forward to this session, and thank you Manna24TV for inviting us to this interview.
A lot of people, they really want to get into finances, right? All that investment and savings and all, but they have no idea where to really start, right? So what's some general advice you would give to those people?
Yeah, I think starting with a financial advisor is probably a good idea to start with. A lot of people are self-directed these days. There's a lot of ways you can open up your own investment account through a brokerage firm like a Schwab or like a Robinhood. And many people are self-directed and doing their own type of investments. But I would recommend in the beginning, if you have no experience investing yourself, to seek out some type of financial consultant, like a certified financial planner, that can help kind of get you started with the basics of investing. What types of industries you should be looking at, what types of investments, whether stocks, bonds, what type of asset allocation. So my advice would be to kind of start with getting some professional advisory help first before you become a more self-directed investor. For me, I worked in the industry, so I have a lot of experience of what the industry is all about. And in the beginning, I had an advisor myself, and I advised other clients. But with all that experience now, I feel like I can be more self-directed on my own.
My parents, they set up like a bank account for me for like savings, like for college and like for later purposes. And I understand that like technology and healthcare, all those like financing things are really important, especially after the recent pandemic, because a lot of people have been struggling. And because of that, economics is always like, it's uncertain and anything can go wrong and at a time. I have to be careful when like managing my risk and diversifying it. So what do you think is the first step to diversifying my accounts?
That's a great question. So the first thing I would say is make sure that your asset allocation is right. Asset allocation means kind of the ratio between how much you're investing in stocks versus bonds or fixed income investments versus cash, like money market account or savings account. As you're a young person, most advisors would say you could be a little bit more aggressive. As you get older and you accumulate more wealth, you probably will be a little bit more defensive over time, more conservative. But being your age, I think you can have a longer investment time horizon, which means you could probably start with something like even 100% stock allocation versus when you get to your 30s, 40s, and 50s, it may be more balanced between stocks and bonds. So the first thing I would say is pay attention to the asset allocation. For you, probably more aligned to a higher stock portfolio allocation than bonds and other money market type of investments. There's other ways to diversify. You can diversify geographically, between the U.S. and other, global markets. However, most U.S. companies now are multinational companies, like in the S&P 500. Most of those companies are doing business globally anyways. So even if you're invested in the S&P 500, you're kind of investing in overseas markets as well. But there's, obviously you can invest in Korea, you can invest in China, India, other markets. For me, I have more of a comfort level with the U.S. market because the system is more, I think it's more organized and efficient in terms of the financial markets. So there's regional diversification. You can also diversify in industries too. Like you mentioned, technology, healthcare. You can diversify into like financial stocks or basic industries. But technology is kind of moving the economy right now, especially with AI. So that's where more of the S&P 500 stocks are technology-related stocks. Where I'm kind of getting at too is you can get a lot of diversification from like an S&P index fund, S&P 500 index fund. That's like the 500 largest companies ranked in terms of market capitalization in the United States. You know, like Intel, let's see, Amazon, Apple, Google, Nvidia, which has been a hot stock. They're all part of the S&P 500. So if you invest in an S&P 500 index fund, you're getting a lot of diversification that way, instead of just like picking 2 or 3 stocks. Then you're kind of exposed to more risk. Asset allocation, regional diversification, industry diversification. Then you can also diversify into like large cap stocks, which are the bigger names like Apple, Microsoft, versus smaller cap, kind of smaller companies. You could also diversify between growth stocks and value stocks. To simplify it, I think starting off with an S&P 500 index fund, it's a pretty safe type of investment. There's only been a few years over the past 20 years where there's been negative performance. Most of the time over the past 20 years, it's been like 11% annual rate of return. So that's pretty good.
In the long term, sustainable investing and ESG, so environmental, social, and governance, they become more like increasingly important in this area. And with growing concerns about climate change and just how like the world is headed right now with all the environmental issues and like social responsibility and that kind of thing for the government, investing in those areas is always a good, like, it can be a good choice. It could help you. But do you agree with that kind of perspective, and like what are your thoughts?
I do.
When you're talking about ESG, environmental, societal, and governance, it's just good business. So the companies that are paying attention and trying to comply with the ESG metrics and the standards that have been put in place, that's just good business. It's good practice to have that. And you can see I have a slide here that talks about ESG. And it compares the S&P ESG index with the S&P 500 index. And you could actually see that dark blue line above the light blue line. The dark blue line is the ESG index. And they're actually outperforming the overall S&P 500 index. So those are the companies that are paying attention to ESG metrics. And you can see the correlation there is very closely aligned, but slightly the ESG stocks are outperforming the overall S&P 500 index. So you can see that over the past 5 years, those companies that are paying more attention to ESG, climate change, maintaining carbon neutral business, on the societal side, maintaining your diversity and inclusion, making sure they have a diverse employee base, diverse suppliers, and on the governance side, making sure you have the right policies and procedures to comply with these standards. Those companies that are doing that well, they're actually performing better than others. And you could also see, like here on this slide, that many of the companies that are in the S&P 500 index are also the companies that are leading in the S&P 500 ESG index, like Apple, Microsoft. Those companies are all paying attention to ESG. One thing I will, however, longer term, it's just good business practice to be complying with ESG. So I think long term as an investment, ESG is a very sound investment.
Could you explain, for those who don't know, explain the difference between S&P 500 index and 500 ESG? Could you just explain what they are?
Yeah, so S&P 500 index is basically the largest 500 companies in the United States based on market capitalization. Market capitalization is a factor of shares outstanding times the stock price. You know, you see here Apple, Microsoft, Amazon, Google, Tesla, Nvidia. Those are the largest companies in the S&P 500. So they're based on, they're all weighted. 490 more companies on this list, but I just want to show the top 10 here. And on the right are the stocks in the S&P 500 ESG index. And as I was saying, these companies are paying attention to environmental, social, and governance practices. And so, as you saw in the last slide, their performance is actually outperforming the overall S&P 500 index, which means that paying attention to climate change, paying attention to diversity and inclusion, paying attention to carbon neutrality, that's just good for business. And the shareholders are rewarding their performance.
So while we're on the topic of stocks and investments, a particularly prevalent issue in our area for the past couple of decades is in regards to immigrant families. A lot of these immigrant children, they grow up with parents who are unfamiliar with our country's economics and finances, right? So what this does is it limits their financial literacy. That's just a big picture, but could you explain more of why this happens?
Yeah, I think, obviously there's cultural differences, language barriers as well, lack of role models. And I think this type of a session that we're having right now is what we need more of in terms of having experienced financial professionals helping the younger generation learn more about investing and finance. We need more role models in the Korean community who can teach the younger generation and the older generation too. I think the older generation of Korean Americans have probably been a little bit burned in the past by what happened in the late 90s in terms of the IMF bailout in Korea, which impacted the whole financial industry. A lot of people who were borrowing money to run their business went bankrupt. And it was a very hard time for Korean companies and Korean people in general. They remember that and kind of stigmatized by that whole IMF bailout era. About 10 years later, 2008, we had the great financial crisis, right, where people were over-leveraged in terms of their spending, and the housing market collapsed. The S&P 500 went down 38% during that one-year period of time in like 2007, 2008 period. So people are kind of traumatized by that. And, many, I wouldn't say just Korean Americans, but like Asian Americans and in general tend to be very conservative. They put their money into savings or like CDs or, into their business. And now it's becoming a little bit more commonplace to be more comfortable with investing in stocks. They're hearing from their friends in like message boards about like, cryptocurrency or Bitcoin or AI or Nvidia, and they want to get into that. So there's definitely the interest, but there's just a lack of education, lack of knowledge, and so we need to do a better job of that in the Korean community to educate each other. We do need more Korean financial advisors, certified financial professional CFPs, certified financial planners, who can help educate other Koreans, older generation and younger generation, on the basics of financial investing, financial planning. Please like and subscribe.
만나서 만나요.